G'day folks, welcome back to Pete's Investing. It's January 16, 2024. This is the US S&P 500 technical analysis. So as the opening slide does say, it's target hit, and that's because of this on the hourly basis. You can see there was a bullish divergence and it bounced up and it went retrace right up to the 100% level. But looking at the larger term time frame first, look at the weekly and daily first. On the weekly, you can see here we've broken up beyond the moving average 400 or the CCI 400. We did have still got a potential bearish divergence here, so just keep an eye on that. So long as that CCI remains lower than that point there and the price keeps rising, that's a bearish divergence. So we may see a pullback or possibly even a crash. I can't tell from this. At the very least, a pullback to the 38% level. On the daily chart, likewise, we've got a bearish divergence versus the price, and again that could pull back, and we've got a target on the daily between a 23 and a 38% level there, which happens to be that point there. So that's where we possibly may expect it to come to at the very least, but of course it could go lower. But on the CCI 400, we've got a neutral movement. You can see there the CCI is broken through the moving average, but now moving and broken above again, moving sideways. And as I said, we've got a bearish divergence on the CCI 150. On the daily chart, again, you can see more clearly we've got a bullish divergence back here that executed quite nicely, broke up through the 38% level and bounced off the 100% level, which happens to be that resistance at 47.99. Now it's been fluctuating sideways, and because of the holidays, I guess, not much action happening, but you'll notice also the CCI 400 is broken below its moving average and trending ever so slightly to the downside. So at the moment, just be careful about taking long positions until we breach this, but especially if this divergence fails. And for it to fail, we need to see the CCI break higher than that area there on the daily. The hourly divergence is played out going long, so I wouldn't be taking that position. Likewise on the weekly, if that is a divergence, we need to see that CCI break much higher, in which case we'll see the price break above that resistance as well, as I said. So we've got some key factors impacting global markets, including inflation with rising prices worldwide. That impacts obviously consumer spending. Interest rates, central banks tightening monetary policy and potential dampening economic growth and market valuations. Geopolitical tensions, ongoing war in Ukraine, and now the recent outbreak of war in the Middle East. China's economic outlook, slowing growth in which is a major economic engine of the world. And also COVID-19 might be over, but we're still feeling the impacts of the pandemic impacts globally on the supply chains. So there's also a possibility of new waves of lockdowns for whatever reason, whether it's some other disease or climate change. Who knows what they're going to pull out of their rabbit out of the hat. And in terms of market dynamics and trends, we've got volatility, so increased price swings and uncertainty across major markets. Sector rotation, preferences shifting towards defensive sectors, utilities, healthcare, etc., and away from growth stocks such as technology. Emerging market challenges, capital outflows and currency depreciation in some developing countries and economies, and sustainable for focus, growing investor attention to environmental, social, governance, malarkey. So if you got value out of the video, hit that like and subscribe button. Don't forget we've got some divergence to look out for. Hit that like and subscribe, and we'll see you in a future video. Thanks for watching.